Hey, good morning, everybody. So hopefully everybody enjoyed their weekend. I certainly did. I won a poker tournament on Saturday night, but let's get into trading. I'm wearing red today. What does that mean about the market? Okay, so I'm going to share some important data that I saw over the weekend that makes me think the market could potentially go lower. And yes, we broke above the 50-day moving average and the 200-day moving average. Very bullish signs for the market. So the market right now is on a teetering point, okay? We could either all of a sudden turn negative and go back into a bit of a bear cycle, or that 50-day, 200-day moving average is going to hold true and stocks are going to pump higher. And the only thing we saw last week was a bit of consolidation on Friday. Okay, so let's get to these main facts that I've got going on. So JP Morgan first is reporting 23% of trading that happens on a daily basis is now made up of day traders. Ooh, that's pretty interesting, telling me that retail investors are coming back into the market pretty strong. So let's just see if that's true. Let's just go. Okay, we go back to Thursday. Thursday's inflow in the market, right? Biggest short squeeze in 8 years, meaning the shorts were covering their positions. So Thursday, which was when Amazon, Apple, what was it? Amazon, Apple, and one of the other big ones, was it Microsoft or Google? They reported, and they reported shitty numbers. Let's go back to Apple. Apple reported shitty freaking numbers. I almost cursed there. And yet Apple roared 4% to the positive, which doesn't make sense at all. I believe Apple was green on Friday as well. It finished green. So, yeah, 23%. Here we go. The same number I'm reading. Next, let's do a little AMC action. AMC borrow rate for all those that are short AMC. Borrowing rate is now 412%. That's freaking high, okay? 100+% is high. 130, 135, 140. We're at 412% on AMC. So what does that do? Boom, it puts AMC on my radar this week. I will probably be looking to trade AMC at some point. Also, Intel is on my radar. Now I'm going to come back to Intel when I start talking about stocks after I speak about the ranges of the S&P. But AMC and Intel are two stocks that I'm going to be trading options on this week, and I will explain the Intel reasoning shortly. Okay, breaking news. U.S. credit card debt has hit a record $930 billion. Who told you that 6 months ago? I told you everybody's using their credit card. Everybody's depleting their savings. I mentioned going into the holiday season in December, no one gave a shit. Oh, my credit card statement, it says I owe $2,000. What's the difference between owing $2,000 and $5,000? Let me buy people gifts. Well, guess what? The light bulb moment's going to happen to them. They're going to get hit on the head with these credit card bills that they cannot pay. It's the same thing when people can't pay their housing mortgages. Okay, let's go into it. Okay, key events this week. We got 6 board members from the Fed speaking. Fed Chairman Powell speaking on Tuesday. We have jobless claims data on Thursday. Consumer sentiment on Friday. Jobless claims sentiment doesn't really interest me all that much. Jobless claims more than consumer sentiment. So what really interests me? Well, shit, we still have a ton of earnings this week. We've got Disney earnings, Uber earnings. Now let's talk about Disney's last quarter. They said they lost over $1.5 billion on their streaming service. Holy shit. Do you think that's going to turn around in one quarter? All of a sudden, Disney's going to come back and say, hey, we made money on our streaming service. No, they're going to come back and they're going to tell us they lost another $1 billion in streaming service. What could that do? Well, based on subscribers, that could affect Roku. That could affect Netflix. What else do we have? We've got Uber reporting. What could Uber affect? Because you don't want to buy or sell Uber options. The IV is going to crush you. But if you want to play Uber, you could look at its buddy, Lyft. Now, Lyft's been tearing from $12 to $16, had a bit of a pullback. So again, these are plays that you can make. Now let's talk about so far this year in the stock market. The Dow is up 2.3%. The S&P is up 7.7%. Just this year, we're like just into week 5 of trading. The NASDAQ is up 14.7%. Understand, even after shitty years like last year where the NASDAQ took a tumble, let's just say it rebounds, and it rebounds as much as it fell. So let's say the NASDAQ goes up like 33, 34% this year. Okay, we're up 14% already. So if you think the market's going to run higher, another 5, 6, 7, 8%, the NASDAQ's going to pop another 10%. You're talking about 25% within the first 6 weeks of trading. Shit is very unlikely. The markets, in my opinion, is getting frothy, which is why I wore red this morning. I might start wearing red or green based on my analysis and what I think the market's going to do. Why? In case you don't really have time to watch the whole segment, I'm going to share with you what I'm thinking. Okay, so we could talk about Apple and the Qs. Had the highest ever call volume on record last week. Market internals are flashing warning signs. Why? Because it's always some type of pattern like this, head and shoulders. So the fact that we're at the head of it makes me more weary. Oh, you know what? And then I can get into, I'm going to talk about the SPY ranges of support and resistance. But when I talk about Apple, I'm going to talk about stocks and their forward PEs. So I look at Amazon and we're sitting right around 21 on their forward PE. I'm looking at Google around 21. I look at Apple. We're still around 25 or 26 forward PEs. Understand that in a normalized market, you're probably looking at across the board stocks in the S&P 500. The key players will generally have forward PEs around 17. Okay, the fact that we're still sitting above that level is a little scary. All right, so let's get into some stock play here. We're getting into stocks, and then I'll talk about the SPY. I mentioned AMC is going to be on my trading list this week. What other stock? Apple. Why? I just told you. Apple's forward PE is 25.16. Okay, 25.16. What's Google's? Same range? No, 20. So Google's at 20. Apple's at 25. Amazon. Let's see where Amazon is. Oh my God, their forward PE is 64. Holy shit. So Amazon scares me a little. Okay. I might be looking to short Amazon. That might be another trade. Then I'll look at AMD, right? AMD, one of the chip leaders. Okay, let's see where the chip leaders are at. AMD chip leader, 27 forward PE. Okay, that could still go a little lower as well. But if AMD is at 27 and Intel is a worse chip manufacturer than AMD as far as according to their books and their forecasting for next level, right? And Intel came out with shit earnings. And what do we see since Intel's shit earnings? They have been inflow buying Intel. So let's look at Intel's forward PE, right? AMD was 28. AMD is one of the leaders in the chip sector. Amazon's forward PE, 54. 54, is that crazy? Do we remember when Meta got hit hard? Remember Facebook got hit hard back down to 100? Their forward PE was 13. Now their forward PE is back in the 20s. So understand, I'm not saying that Meta's a steal or Meta's not a deal. What I'm telling you is compare like-minded stocks, apples to apples, oranges to oranges. So when I look at AMD and I say, okay, there's a little selling pressure. However, AMD's forward PE is at like 28. And when I look at Intel's forward PE being at 64, it makes Intel twice as expensive. Intel is not the leading chip maker. NVIDIA, then you have AMD, you have Xilinx, which merged with AMD. So there's a clear Coke and Pepsi. And then you've got back in the field, you've got Intel. So let me tell you, when Intel starts turning to outflow, right, because they had shitty freaking earnings, it's going to drop. So the key thing about Intel is if the market pops and the SPY goes 420, yeah, Intel's going to pick up another 10 or 12% to the upside, $34. However, if the market struggles and we see more of a head and shoulders for the time being, I expect Intel to perhaps give back 12%. So I've mentioned 3 stocks that interest me a lot. Actually, 4. Let's go over them again, and I'm going to give you a 5th one. All right, so Intel possibly downside, okay? AMC short squeeze, possibly upside. Apple's forward PE at 25, a little expensive. I could see them giving back 5% or 9 points this week. So Apple downside. I mentioned Amazon, potentially forward PE 54, more room to the downside. And here's an upside one for you. And I mentioned this. What was it? A week ago on Thursday, because we did the top flows using our Discord. So when I mentioned top flows and I looked at it on Discord, I'm just showing you guys Discord right now. What did I see? What was it? AI, right? CAI is the company name. The symbol is AI. Remember, it was trading at $15, $16. Let's look at it this morning. AI, and we hear about chat, GDP, GPH. Here's your AI, which is C3 AI, right? What do we see? Inflow 4 to 5 days. The ranges as far as volumes going up, and the stock went from $13 and it's now at $25 where it closed on Friday. And this morning it went as high as $28. So there are still some positives. Even if the market struggles, it's likely some of these artificial intelligence companies, especially after this GHP came out, right? It can write your reports. It can do your homework. It can pass the bar exam. It can put my wife to bed. It can take care of my kids. It can do everything. So that's pretty cool. All right, now let's get into the SPY. SPY is sitting this morning at drum roll please, down 0.8%, which puts it right at 409. 409 is no man's land. Understand, where should the market find support? Let's give you the bull case scenario first, okay? Bull case scenario is market finds support at the 407 range, okay? If you're talking about the S&P 500, you're going to talk about 4070. It's very easy. Just add on an extra zero and you're right there, or remove it. So 407 range has some massive support, some massive dark pool levels. Where was rejection? Rejection was just over 415. So let's talk about the ranges in between, because understand, if you bounce off 407, you're going to go to the next level higher, which is 411, okay? So if you want to get in calls, you want to get in calls when the SPY is sitting at 407 and you're looking for a bounce. If the SPY breaks 407 to the downside, that would be a pretty significant move, and I'd be looking at the next level of support underneath. But that's my bear case scenario. So again, bull case scenario, we'll start on the low end, okay? 407 is going to show major support. Then you're going to go up to 411. If it breaks 411, you're going to see extremely bullish activity where the whole market, every industry is ripping higher. The next level up is 414 and 40 cents, basically 414.30, 414.40. So key levels, again, 407, 411, 414.40. If we break that, you're going to go back up to 417, 418, which is the high from last week. So that's your bull case scenario. And if it breaks that, you're going back to 420, which should definitely face some resistance. So your bull case scenario is 407, break it, 411, break it, 414 and 40 cents, break it, heading back to 418. That would be your bull case scenario. Not going to happen in one day. It would be spread out throughout the week. There'd be continuous buying. There'd be steps higher. Okay, bear case scenario. Wearing red today. It's a possibility. Why? Because I heard the Fed speaking, and I think they're going to be still aggressive. I heard the chairwoman from the International Monetary Fund speaking. They said the Fed needs to continue with their course of action. I've heard Wall Street rumors that we're going to do 25 basis points at least 2 more times before they talk about cutting the rates, because they have to tame inflation. So what is the Fed still interested in? Jobs report. So that'll be out on Thursday. So where could the market do? We could see some choppiness. Thursday could be a confirmation. Thursday, Friday, we could dip again. So we might see 2 out of 3 green days from Monday to Wednesday. I think Thursday we'll see a bit of a struggle, and I think Friday we'll see a drop just like we did this previous Friday. So again, I believe we're going to be range trading, which is why I'm giving you the ranges. So let me give you the bear case scenario, okay? Bear case scenario is you want to get involved in puts in the market. Where can I look to enter? Again, there's major dark pool level at 416. So if you're looking for the market to pop, and again, we're waiting for A+ entries, you're waiting to see 416 reject. If we do not get up there, you're looking at the next step higher, 414 and 40 cents. That's what I'm looking at as far as entry. SPY hits 414.40. I'm going put heavy. I'm going out a week to give myself a chance to time to be right. Okay, that's my mindset as far as the SPY goes right now. Again, bear case scenario, because we're sitting right now, we closed at 412 and we're sitting pre-market. Let's just see where the SPY is sitting at, 409.41. Again, in no man's land. If the SPY goes up, and I'll give you the very specific levels, let's just see where we're at here. Boom, boom. I wrote them down. And of course, I say to myself, okay, so I already mentioned 414.40 as a rejection level. Under that is 412.41. Okay, these are looking at a micro, zooming in rather than macro. Macros 407, 411, 414.40, and then 418. On a micro, zooming in on it, we're looking at 412.41 rejection. Okay, we're starting under that. So where's the support level? Support level is just under 411 at 410.80. Well, we're starting under that as well. So again, this morning, right out of the gate, I'm going to be looking at 410.80. Okay. Understand it's plus or minus 20 cents. So basically, I'll say 411. If I see the markets reject 411, then I know we're going back down to 407. So there's a trade setup for you as well. Again, 407 showing support. If it does not show support, we're talking about 403. Then you're talking about the key level of 400. Psychologically, if we break through 400, we could see 395 again. Again, for those that missed it, stocks that I'm looking to trade this week, AI, right, in a positive direction, Apple, Amazon in a negative direction. I'm staying away from Meta. I do think Intel will pull back again. It's got a double valuation of AMD. AMD's forward PE is 20, what would I say it was? 27.88, so basically 28. When you look at Intel's forward PE, remember Intel just came out with earnings and they sucked. It's 55. So if I'm going to play puts on a chip sector stock this week, which I think I'm going to do, I'm going to be looking at puts on Intel. All right. Usually I like to trade the SPY. I'm going to use the SPY as a gauge, meaning if I see rejection, I know it's time to get into puts for whatever stocks I think are going down. If I see support at 407 on the SPY and I know the SPY is going to go higher, then I'm going to say, shit, any puts that I'm in, I'm going to get out because the market could likely go up another 1%, taking my puts higher. All right. So it's very easy strategy. If you're just jumping into any trades, and again, 23% of the market trading is made up of retail traders. What are the institutions here to do? They're here to pull the rug out from under you. So when I tell you exiting last week, the Qs and Apple saw the most amount of call options ever on them, okay? Do not be surprised if tech and Apple sell off. Again, Apple, Amazon, Google, shitty freaking earnings, guidance, sucked ass. And what do? They push the stocks higher. Let's remember, Amazon was down like 7%. It only went down 2%. Apple, which was down 4.5% to 5%, ended up turning green by 4%. They're fucking crazy. All right. So that's why you have to be cautious. Now, dude that I respect, PB, he was in Apple calls and he crushed it on Friday. Would I ever be in a similar position? No, because I know the Apple earnings sucked. Okay. So again, I'm looking at rejection levels today. I'm looking at 414.40 on the SPY. Under that, we're talking about 412.60. Under that, we're about 410.83. And under that, we're 407. Those are my key levels. If you see support, it's time to get into scalping calls. If you see resistance, it's time to get into scalping puts. Simple as that. Trying to be as helpful as possible. Hopefully that helped you. Yes, Chat GPT. Right. I mean, it's like those tongue twisters. Sally sells seashores by the. Anyway, I had my daughter do that. It was pretty funny. Let's just see what kind of questions we have today. They're awesome. Good morning. AMC possible squeeze. Yeah. As long as the rate to borrow AMC stock continues to go up. And again, it was a shock to me because I do not really follow AMC, but I started reading some comments on Twitter and I saw the borrowing rate was 412. And then I did my own research and it concurred with what I was reading on Twitter. So I'm going to be watching AMC. Now understand, AMC could pop in two directions. It could pop higher. There are a lot of hedgies that are still shorting the freaking stock. So if they have to cover, let's see. How do you come up with support and resistance levels on the SPY? Well, you could chart it yourself just using simplistic lines, drawing angles from the top, drawing angles from the bottom, seeing where support is and seeing where the volume increases. Or if you're part of something like our Discord, very easy. You can go on, somebody looked at the dark pool levels at 5 minutes ago. Dark pool levels for the SPY. Keep in mind, I've told you guys, and I say this a lot, I'll repeat it again. More than 50% of the market activity happens on the dark pool. What's the dark pool? It's an off-market pool. It's lining up a buyer and a seller. Hey, I want to sell 1 million shares of Tesla at $190. Somebody wants to buy 1 million shares of Tesla. They're willing to pay $190. There are two sides, a buyer and a seller, but they do it on the dark pool so that it doesn't push the stock through the roof or drop the stock significantly. Because if you're talking about 1 million shares of a company that costs, $190 a share, you're going to see the market move. So what do? We go into the dark pool level. We look at it. We look at the large dark pool levels. Oh, shit, the 407 level actually got a lot smaller. Where am I seeing support now? 401.22 has a $28 billion level, 404.32. Next way, it's pretty ghosty, meaning there's not huge volume all the way to 416. So your bull case scenario is, which I told you already, the SPY finds support and rides up to 416. The bear case scenario is about to get a little worse. The bear case scenario, which I said you should find support at 407, isn't at 407 anymore. The largest dark pool level is at 404 and change. So again, we go plus or minus 20 or 30 cents. So just to be safe, let's call it 405. Holy shit, I'm wearing red. The market could go down to 405. Now, I always say it might not happen today, but days that I say that, it actually has happened. So the fact that we're sitting at 409 this morning and change pre-market, I would say, okay, I'm looking for support right now this morning at 404 and change. Again, if the market gets bought up, I'm going to look for a rejection. When I see the rejection levels, I'm going to get into my puts and I'm going to ride them down to 404 on the SPY. If the market drops at first and I see support at 404, it could change my whole strategy. I can say I can get into calls at 404, expecting a bounce right back to 407. Okay, it doesn't mean I have to be bullish in the market. And again, we're over the 50-day moving average and the 200-day moving average, which are kind of support levels. All right, good morning, fans. Smash that like button. Yeah, hit the like button, people. I'm here every morning. Please join me tomorrow. It's 8:30 a.m. I'm not telling you what stocks or options to buy. I'm telling you what I'm thinking. Hopefully, my thought process helps you deliver your own strategy. Hey, shit, this made sense. Here's a stock I'm going to watch. Or you might be watching a stock I haven't even mentioned, and you're looking at inflow and outflow and volume and the dark pool levels for your stock. Yes, Discord has those same dark pool levels. If you're looking at Tesla, Apple, AMD, NVIDIA, there are dark pool levels for every stock. Holy shit, light bulb moment. It should tell you when to get in and when to get out. You like the green red shirt? Yeah, I might have to buy more red shirts, though, because I can't wear the same one day in, day out. Same with green. And again, GPT, the coolest shit out there. I've got to get more involved in this. I didn't understand everything that it could do. AI is crazy. They're going to lose engineering jobs to AI. With that said, I'm done. Heading over to Discord, morning video, going to give you more specifics about the specifics I'm looking to enter and exit out of at least 1 or 2 trades. Thank you all for joining me. Yeah. Join Discord. I get comments all the time. Hey, I'm not ready. I don't have time to trade. One of my buddies, he works at a bank. He's on our Discord. I got him on our Discord. He hasn't even used it yet. He's telling me he can't use his computer at work, so he's got to trade off his phone. You could trade off your phone, but you have to be laser focused. Pick one stock, make it your family, learn everything about it so you'll know exactly when to enter and when to exit, and that will allow you to trade whether you're a teacher, whether you're in finance, whether you're a trucker. It doesn't matter. Improve your financial future. Join me here tomorrow. You can follow me over to Discord. Thank you so much, everybody. Have a great